We've got Mr. Jalan also joining us now, in fact, on earnings. And remember, it's been a muted Q3. Let's get a sense of what's been at play. Mr. Jalan, what's impacted the operational performance this time around? We had a strong show the last couple of quarters. So what were some of the factors that affected numbers this time around and some of the challenges on both the commodity chemical as well as the home textile front?
As you rightly said, this quarter our performance or the bottom line is the same as it was last year same quarter, and primarily because of the three reasons. One, on our chemical business, the price of the soda ash has dropped by roughly around 7%. However, we have been able to maintain or we have been able to manage the margin reduction by around 3% only. And that is primarily because of the better efficiency, better serviceability to the customer, and volume growth around 8%. On the other side, on the one time, the government has withdrawn the export incentive called MEIS, and we had to take a hit of around 10 crore in this quarter as an exceptional item because of the withdrawal from the retrospective effect. And the third is that spinning industry is also passing through a headwind, and that has also impacted the margin. Overall, our margin has dropped by around 2.5% as compared to the same quarter last year.
So tell me, how are prices holding up across the product portfolio? Have you seen any price moderation coming in?
Yeah, chemical, as I said, chemical price has dropped by around 7%, same quarter last year, and we expect another 2 to 3% drop in the prices going forward. However, we are seeing a revival in the demand going forward, and probably some volume growth will be visible in the next few quarters, and that will help us to maintain the margin at the same level what we have achieved during this quarter.
How is it that you're seeing volume growth then in inorganic chemical segment going into FY21, on account of brownfield expansion and with the greenfield expansion as well kicking in from FY22?
In terms of volume growth, definitely we are seeing a volume growth in the sales for the next quarter, because oversupply situation which has happened during this quarter of a new player coming into the soda ash business, there is no further expansions happening across the industry, except some marginal volume will be coming from our side. So we surely see some volume growth going forward in the next year.
What's the outlook on the soda ash cycle as well, if you could shed some light on that?
Yeah, soda ash, as I said, soda ash definitely we are seeing a volume growth next year, and which could be in the range of around 4 to 5%. And overall price will be stable as compared to 2020-21. The prices will be stable, will be approximately around at the same level what happens in the last quarter of this year.
So on the back of ongoing expansions and improving outlook for the textile segment, what's the improvement in performance that you're penciling in?
Oh, in terms of the overall, what we see is that this year, if you look at the year as a whole, you will find that our bottom line will be growing by 20-25% as compared to the same year last year. In 2021, probably the number will be closer to the number what we achieved during this year.
Okay. Give us some color on the margin.
In the last 9 months, we have achieved a profit after tax of 35%.
Okay. Okay. And give us some color on the margin trajectory as well from here on. How you're looking to bring down costs as well, the outlook on margins going forward.
See, as I said, the soda ash prices will be further maybe reducing around 2 to 3%. In spite of that, we will be able to maintain the margin of 28% what we have achieved during this quarter.
The status, Mr. Jalan, on debt reduction plans. What prompted the buyback?
You see, if you look at this during this 9 months, we have generated a cash flow of around 420 crore. Out of that 420 crore, we have reduced our debt by 200 crores, and we have spent around 200 crores on our growth of the capex. In addition to that, we have also paid the dividend of around 60 crore. So this 400 to 500 crores of the cash generations will continue at this margin as well. Our estimation is the year as a whole, our cash flow generation will be roughly around 500 crores. Out of that, the buyback which we are talking about is only to the extent of around 60. We have a sufficient cash into the balance sheet to take care of this buyback.
Yes, then Mr. Jalan talking us through the earnings this time. Okay.